Hey guys, welcome to another episode of the Agent Rundown
Real Estate Coffee Talk.
I'm Andrea.
Anne Marie.
Angel. And today we want to talk about a topic of loans, what types of loans there are and the different qualifications, just a broad generalization of each of them. And so I guess I'll start, you guys.
Go ahead.
Your
Dive right
typical type of loan that you can get is your conventional financing, and that's either 20% down, 10% down, 5% down. But if you do put 20%, then you don't need private mortgage insurance. But if it's anything lower than that, then you do get your PMI payment, and that typically goes between 0.5 and 1% of the total loan amount, spread annually, of course. And then the second type of loan that I want to discuss is the FHA, and that's your typical 3.5% down loan. One thing to know about this is that once you get an FHA loan, you must purchase a home, a condo, a home, or whatever it may be, that is FHA approved. So there are other restrictions or steps, I guess you can say, that you have to go through, and a good thing to keep in mind. But there are plenty of other loans that you guys can take advantage of. So.
All right, I'll dive right in. So the next one is the VA loan, and since I'm a veteran, I wanted to talk about it. If you have served, do not miss out on your chance to own a home with 0% down and no PMI. Mm-hmm. That is crazy.
Right.
Huge. Then I guess another one, CalFHA. I'll just dive right into that one too. So CalFHA is a down payment assistance program that also helps cover closing costs. So you literally can buy a home with as little as a few $100s down. You need a low FICO score, and to be considered, you have to be a first-time home buyer, but that means that you haven't bought a home in the last 3 years. I know, it's so exciting.
So if you had bought it 3 years before that, then you're still
You
good.
qualify as a first-time home buyer.
Right.
Most people don't know that.
Yeah.
Some people are like, I'm gonna go get really bad credit so I can go and qualify for
But like if you're renting, let's say for what you had to sell your house for whatever reason and you're renting, you just show them your rental and
your
then
lease agreement.
Yeah, your lease agreement.
Or that you haven't purchased in 3 years, which is crazy.
Right.
That
Very
means
good.
like every 3 years you have opportunities to like take advantage as a first-time home buyer. A lot of people don't know that.
Yeah.
I love that program.
Yeah, it's good.
Well, so there's two other really broad ones. One of them is actually called hard money. And when I bought my house here, not my first house, but the house that I'm in now, I actually had to use hard.
Fancy.
Yeah. Pinkies up.
No, it's called divorce.
Just sorry.
So when I bought it, I had to use hard money because I had cash to bring in, but I couldn't qualify for the loan. So I did a hard money loan, and then I did a refi. So hard money is usually by a private lender. The interest rates are much higher. So we are right now hovering between 3 and 4 interest rates. A hard money right now would probably be between 5 and 6. 7 and 8.
It's an expensive loan to get.
It's definitely, but it helped me to get in my home, so
sure.
it's definitely an option. The other thing about hard money is that it is interest only, so you're not paying down any principal. And
But will you just break that down really quick? So they know when you purchase, it's interest only until you refinance. So how soon did you refinance?
Well, so that's just it. So the private lenders, they want to make their money and then they want to get out. So it will tell you in the documents, it could be a 6-month hard money loan. Mine was 1 year. I had to refinance out of that loan within 1 year.
Wow, yeah.
So
I've seen them as little as like 3 months, 2 months.
yeah. So you really have to be particular, but it's like I said, I wouldn't be in my house right now without the hard money.
Right.
And then the last thing we could talk about is it's called a bridge loan. You don't hear about it a lot, but it's when your house is on the market and you have found your perfect house. And you want to close on it, but your home hasn't sold yet. You can do something called a bridge loan, and that will allow you to buy your new house while your current house is on the market, and it's called a bridge loan.
Wait, there's one more that I was like excited to learn about a while back. There's also seller financing.
Oh yeah.
And I've been seeing that a lot more lately, where it's kind of the same thing as like hard money. You know, it's usually higher interest.
Right.
And they typically want a lot more down. but they're willing to finance and they're in the position of finance you to buy their home.
Yeah. And
I've
it's,
seen that in multi-million-dollar properties.
well, it's also really good if you have let's say you have a duplex, a
Right.
triplex, and somebody wants to buy that, and you're tired of being a landlord. You're tired of tenant calls at midnight saying, you know, my plumbing broke
Right.
or the electricity went out, whatever the case might be. If somebody comes in and wants to be that landlord and doesn't have, you know, a good credit or whatever whatever it might be, you become the bank,
Right.
you know,
Mhm.
and then they pay you.
Yeah.
So it's
Through time they'll pay it off, and
yeah,
It's
it's
a
a great
win-win
option.
yeah, it's a win-win situation.
Yeah,
It's something
definitely.
that I never knew about until about a year ago, and I was like,
Really?
oh, wow.
Yeah. And I wish more sellers would be, what's the word I'm looking for?
open to doing
Open to doing it, because seriously, like, what's the worst that could happen, right?
They
I'm a-
default. They don't pay.
default, and then you get your house back. So you got their down payment. They've been paying for however many months,
Yeah.
and then they default, and you get your house back.
Yeah.
Right.
And you still get to sell it for what you were going to sell it for on
Exactly.
the market. So you
So-
just made money while you were sitting on it.
Yeah, seller
Yeah.
financing is definitely an option.
It's great.
So
But
Yeah.
yeah,
There's
if you
so
guys
many
have-
options. So like if you have any questions to see like where you fall, great lenders will sit down, and if you have a few different options to you, then they'll just break down a puzzle piece, a picture,
best.
and they'll say here's option A, B, C, and then here's what's best. Some people care more about what they put down up front. Other people care more about what their monthly payments
Payment,
are. So
yeah.
it depends on your situation.
Yeah, absolutely.
Yeah, so give us a call if you have any questions.
Thanks for tuning in.
Till
See
next
you
week.
next time.
Bye.